The purpose of this presentation is to discuss an opening on the board of directors for the National Collegiate Athletic Association, also known as the NCAA. At the end of this presentation, it will be advised that the offer to join the board of directors be accepted due to the financial profile of the organization. A little bit of background information on the organization itself. It was founded in 1906. It had tax-exempt status granted in 1956. Present-day organization has 720 employees, and it serves over 460,000 student athletes nationwide. First thing that I want to discuss is the total revenue generated by the NCAA annually. To do this, the Form 990 tax form that the NCAA is required as a nonprofit organization to fill out every year, the 990 form was the main source of information used for this presentation. As you can see here from this chart, we have 15 years worth of data for the revenue generated, and it's very consistently going up. The NCAA has generated in 2001 here we have 300 million. That was the first Form 990 that I had access to look at, and they generated just over 300 million in the year 2001. Was unable to find a Form 990 for the year 2004, so that's why there's a gap there. But the most recent 990 form that is filled out, the NCAA for the first time in its history generated over $1 billion in a single fiscal year. The majority of this revenue comes from media rights deals. The TV deal that the NCAA is involved in with Turner Broadcasting goes until 2032, and it's worth about $20 billion. So, for example, in 2016, the NCAA received $820 million from that TV deal. So for those media rights, that's where the NCAA generates a lot of its revenue. And again, this is annual revenue before expenses. So we're going to talk about expenses now. These are the last 4 years of expenses that the NCAA has had to report in these 990 forms, and these include grants and gifts that the NCAA has to do, salaries, wages for their employees, championship event costs, and legal fees. Now, if you'll notice here in 2015, they broke over $1 billion in expenses for the year. This is far higher than any other year they've had. This forced them to actually lose money in the year 2015, and we'll get to that later. But the reason for this is because in 2015, the NCAA had a $250 million legal settlement for a lawsuit that they had with students regarding scholarship money, and they had a one-time $200 million payout to member institutions. So both of those amounts had to be reported on the 2015 990 form, even though it was not, it may not have been paid at one time throughout that as a single expense. It was spread out over the year. So they were required to report it during that year. So that's why that number looks a lot higher than the others, and that's why they ended up losing money in that year, which we'll discuss here soon. This is a chart that shows the net income. So this is revenue minus the expenses for that year. This is what they have left over to go towards their total assets. So as you can see here, starting in 2009, their net income was just under $60 million, and it fluctuates year to year, but all of these years they still essentially made money at the end of the year. A little lower here in 2014 with the $7 million, but again, that's still in the green. This is the year that I was talking about here, and it's listed here in this chart as 2016 because these costs happened somewhere right on the middle of this 2015-2016 reporting area. So that's why the previous chart had it as 2015, because that was the expenses. But in the Form 990 for 2016, this is what their net income was. And I understand that that sticks out in the table. However, this is a one-time expense, and it is not a trend in any form at all for the NCAA. Usually, if you looked at a nonprofit and you saw a number like this, it may scare you a little bit. It may make you think that it's a sinking ship, it's going down. But then the NCAA turned around, and in 2017, their net income was $120 million at the end of the year. This is the highest net income that they've ever had at the end of a year, and that was because they generated that 1.06 billion that I discussed in the revenue slide. That is the first time in its history that it's broken $1 billion in 1 year. So the cost of the operational costs during that year were similar to what they had been in all of these years, approximately $800 to $900 million. So because they generated over $1 billion, they were left with 120 million at the end of the year. So it's safe to say that they're back on track with making money at the end of the year, and actually quite a bit of it in 2017. These are the assets and liabilities from 2014 to 2017. These are essentially all of the things that you can place a value on with the organization itself, and these are essentially, they owe money to somebody, or these are things that they are paying off or in the process of. So as you can see here, in the 2016 line, this was the number that includes that probably about $450 million of the legal settlement and the payout to member institutions. So that's why that number is fairly high, and that, as you can see, that affected their assets for the next year, because they had to take that money out of their existing assets. So you can see here in 2014, they had $928 million of assets, $209 million in liabilities. So they were able to keep this asset number on a year-to-year basis around $900 million. They cut their liabilities down from 2014 to 2015, and then this number comes in with those payouts to really send their liabilities up, and that affected their assets. However, the next year they were able to get it back under control and almost cut their liabilities in half, more of a normal number here at the end of the year as far as liabilities, and assets are going to continue to go up because of their large amount of revenue generated throughout the year. Like I said, they generated over $1 billion in revenue this year, or in the most recent 990, and that's gonna add to the asset. So the $120 million that they generated at the end of the 2016 year is gonna, or the 2017 year, excuse me, is gonna go into that asset amount. Just to wrap things up, like I said in the beginning, it's going to be advised that you accept this offer to join the NCAA Board of Directors, because it's a very large nonprofit that affects many aspects of the sporting world. It's successful on a year-to-year basis. It's stable. It does not show any signs of going anywhere anytime soon, and it's sustainable. So this is an opportunity for you to join a nonprofit organization and be able to give back to the world of sports just like you desire.